With investors facing the panic of a looming recession, a number of stock categories are coming under the spotlight, as market participants consider parking their funds in different avenues. One area of high promise that has consistently been observed across investor discourse is the Chinese stock opportunity. Stocks of Chinese companies typically are not faced with the same macroeconomic headwinds that impact Western, and more specifically US stocks. Moreover, with the country gaining edge over COVID-19 and lockdown relaxations anticipated, the Chinese economic engine is expected to once again go full throttle. Chinese stocks, which were held down as a result of these conditions, face tremendous upside potential. China-based companies are increasingly aiming at taking the top spot in all major global market segments. Therefore, in light of this fierce ambition, we present a list of 5 great Chinese stocks for investors to choose from, in no particular order. The first stock on our list is China's tech star, Baidu Inc., which trades under the ticker BIDU. Baidu offers a range of tech and digital services, yet what we find to be a potential game-changer is its self-driving services and fleet of robo-taxis, which it markets under the brand Apollo Go. Apollo Go has established itself as the undisputed leader in China's growing autonomous taxi realm. It has operations that span 10 Chinese cities, and has reported 500,000 taxi rides in the last 3 quarters alone. With recent developments, Baidu is well positioned to overtake both domestic competition, such as the Alibaba-backed AutoX, as well as global giant Tesla Incorporated. Proof of Baidu's innovative superiority comes with Baidu's launch of the RT6 electric vehicle robotaxi. This spacious SUV with 36 sensors is not only superior in terms of its taxi service, but also promises a dramatic cut down in cost through optimization. This would allow the company to significantly scale up in the short term, and is in line with the management's strategic objectives to operate 100,000 robo-taxis by 2030. Management remains confident that through this goal, it could achieve annual revenue of up to $1.6 billion through this segment alone. This emphasizes the immense upside potential that is inherent to BIDU, owing to its superior market positioning against competitors and innovative approach. Overall, the company improved its annual top-line performance by almost 11% in 2021, delivering a revenue figure of $12.54 billion. With cash and equivalents standing at over $28 billion, BIDU holds an extremely healthy financial profile. Second, we bring forth Canaan Inc., a company that has been making revolutionary strides in integrated circuit and chip research, design and marketing. Canaan, which trades under the ticker CAN, holds market edge given its own developed application-specific integrated circuit chips, which is also known as an ASIC chips. As a result, the Beijing-based company is the world's leading producer of high-performance Bitcoin mining machinery. Demand for these mining systems is CAN's strongest growth driver, with it supplying heavily to some of the leading crypto markets in the world, which include the US, Germany, and South Korea. These products accounted for almost 65% of Canaan's 2021 revenue. Additionally, CAN's breakthrough ASIC chip development have also given the company exposure to a robust AI applications market. Given the small size and high performance features of its chips, Canaan products are a preference amongst IoT developers, as well as those that work with facial recognition and speech analysis. As cryptocurrencies continue to see wider adoption, demand for Canaan mining machinery is likely to see a surge in the long term. Although it operates in a highly competitive industry, Canaan takes lead over its peers by its incredibly fast time to market. This strategic strength of the company had led to an early monetization of its ASIC chips, giving it a first mover's advantage. Considering the enormous upside potential inherent to CAN, and the significant tailwinds that support its flight, this Chinese stock is a great one to buy. Despite robust financials, the stock is down by over 60% since the last 12 months, indicating the significant discount it is trading at. This makes the stock even more attractive, considering the bargain it offers. Before we proceed to the next stock on our list, we hope the options presented in this video so far have been insightful. If the list has proven beneficial to you so far, do subscribe to our YouTube channel and turn on the bell notification. Furthermore, we also offer a morning newsletter to our email subscribers. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If the list has proven beneficial to you so far, we would appreciate you clicking on the like button to show your support. Number 3 on our list is the Chinese EV developer, NIO Inc., which also goes by the ticker NIO. Looking at the company's present performance, there is much for investors to marvel at. This is a company facing the brunt of a supply chain lockdown, given China's strict COVID-related restrictions. Despite this, NIO more than doubled its annual revenue in 2021, from $2.5 billion to $5.7 billion. Similarly, its first quarter earnings for 2022 jumped by almost 25% on a year-on-year basis. A reason for these impressive numbers despite severe supply challenges, was the company's strategic decision to enhance production capacity through retrofitting existing systems. As a result, it managed to surpass its 2021 performance significantly, despite the smooth conditions of last year. For July, NIO delivered over 10,000 electric vehicles, which was a 27% jump against the prior year's July figure. Despite such tremendous financial performance, the stock has fallen by almost 60% in the last 12 months. This signals perhaps one of the strongest buy the dip opportunities out there, which is simply too good to ignore. Moreover, we consider the relaxation of China's COVID-19 restrictions, which is already beginning to be implemented at gradual levels. If the company has been performing so impressively amid such overwhelming restrictions, one can only imagine the growth that NIO would take when the environment is eventually favorable to its operations. The stock, therefore, stands on the verge of an imminent price explosion, which we urge investors to not miss out on. Next up, we present China's very own, fintech star, 360 DigiTech Inc., which also goes by the ticker QFIN. Financial technology will forever remain a critical part of the stability of global systems. 360 DigiTech is well positioned to reap in the benefits of the continuity and sustainability of fintech. After all, the company is the largest player in the world, in terms of its investment flow in monetary terms. 2021 had proven to be the most successful financial period for QFIN, despite the broader supply-related challenges faced. The company had continued its earnings per share growth spurt, which saw a rise from 17.3 Chinese yuan in 2019, to an impressive 37.6 just 2 years later. Similarly, on the competitive front, no domestic peer comes close to 360 DigiTech, given its pioneer status as being the first player in the Chinese market to improve loan facilitation through its tech platform. With 193 million users, it is the leading Chinese loan provider. In the first quarter of 2022, QFIN reported the highest amount of loans provided within the country, as well as the highest revenue figure. Given the company's asset-light capital structure, it offers efficient solutions to its consumers. Policy shifts by the Chinese government on tighter loan regulations further work in favor of QFIN. This is because the company's business model is designed to target systematic risks and excess leverage. The result is a stronger market position, where the company further rises above its peers. As the Chinese economy takes off once again with the relaxation of COVID-related restrictions, so too is QFIN likely to rise significantly, and expand its scope of services. QFIN offers investors exposure to the oncoming Chinese financial boom. The final stock on our list, and far from being the least, is the Chinese internet tech company, JD.com, which is more commonly referred to as JD. Although the company provides a wide array of services, ranging from supply chain solutions to online healthcare provision, it is most well known for being a fast-rising e-commerce player. Its online marketplace platform boasts over 550 million monthly users. Despite China's recent economic slowdown, JD brought in an annual revenue of a whopping $155 billion in 2021. The company has maintained annual growth rates of close to 30% for most of the last decade. According to Bloomberg analyst consensus, there is a high likelihood that sales will grow to almost $225 billion by as early as 2024. Despite proposing such healthy financials, the stock had still fallen by 25% in the last 6 months. This was in large part due to the pessimism surrounding the Chinese economy, given the widespread lockdowns. This is further exacerbated by present tensions between China and Taiwan. At its present price of $55, JD is trading at an incredible discount. Its PS ratio stands at a mere 0.55, in comparison to the industrial median figure of 0.95. Analysts have placed a target price of almost $85, which suggests upside potential of almost 63.6%. As impressive as JD's performance is, its fundamentals are about to skyrocket for the company. Most of the headwinds that have been limiting its flight are beginning to subside. In addition to COVID-related restrictions being put off, strict regulation towards tech companies also seem to be coming to a close. The sooner one buys JD, the higher their potential gain on the stock is. That's all from us in this video. We hope the insight we aim to deliver has proven valuable to you, and would allow you to ensure your portfolio has sufficient exposure to the impressive Chinese growth engine. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.